welcome to the Daily Rip Live. It is Wednesday, August 27th, aka Nvidia earnings day, aka the day after Taylor Swift's engagement. I'm here with Tom Bruni, editor-in-chief of Stocktwits, and Austin Hankwitz, one half of the Rich Habits podcast, among many other things. Guys, good morning. What's up?
Good morning.
Good morning.
Happy Nvidia Day.
Happy. There's a lot going on this week. I thought it was going to be chill. And all of a sudden, we got all hell breaks loose at Cracker Barrel. And we also got CrowdStrike, Snowflake. But Austin, it's been a minute. It's great to have you back here with us.
Yeah, excited to be here. I'm fighting a cold at the moment, so if I sound a little like Darth Vader, I apologize. But no, I'm super excited to be here. Big week, right? We've got Nvidia. More importantly, though, Travis and Taylor. Are you kidding me?
I wasn't going to be the one to bring it up, even though I already did. I'm very happy. But
I
Tom,
am just so excited to think about what are the trades around that, right? Is there going to be a theme? Are there going to be is it what's going to happen? There's going to be so much excitement around this wedding that there's going to be some sort of trade to be made here for sure.
Well, Tom, I know you're watching the prediction market on this one. What's going on?
Yeah, Keith, if you can go back one slide to the first one. I mean, I saw this Bloomberg headline and I was like, sign of the times. I mean, they get engaged and the first headline I see is about online gambling bets. And I'm
This is too funny. I've not seen this yet.
What are they betting on?
Well, they were betting on whether or not they would get engaged this year.
Okay.
And so now that bet is done, I'm sure they will have a lot more bets around like where their wedding is, how much they spend, what color tie he wears. I don't know.
Yeah, I had a friend yesterday tell me she found out through an NFL alert. Like the NFL app alerted her to the news. So yeah, it's just like a bad week to be a hater of Taylor Swift, because now this is gonna pour into the season. This is just gonna be, if you thought it was annoying last time, just buckle up. I'm a fan, obviously. So but yeah,
they need to get married at the Super Bowl halftime show. That would be great.
That would be absolutely nuts. Hey, they could already be married. We don't know. They could be keeping things from us. But we will see. And it is certainly a sign of the times. I think I saw that FanDuel has a partnership with CME Group.
They do. Yep.
Yeah. So it's all happening. Like now I feel like, can you even have a trading app now if you don't have the prediction markets? I don't know.
That's true. I mean, I think what's interesting though to talk about that for a second, right? Is you got Kalshi and Robinhood, and now we're thinking BetMGM and DraftKings are probably going to strike something up. But FanDuel and CME Group, what's so interesting about it is now you're unlocking these states where you can't do this online sports betting, but you can do these like event-based contracts, which is essentially the same thing. So now FanDuel can start raking in some more revenue from places that in the past were literally deserts when it came to online users.
I never thought. Yeah, that's so true.
We're not gambling. We're predicting, guys. Come on. Big difference. Yeah, it's so funny how we've gone in like 5 years from literally like, hey, retail can't trade leveraged ETFs or random obscure products in the financial markets to like, no, it's fine. We'll bet on literally everything these days.
Yeah. But yeah, I remember when I started out, it was 2019, I was working at a brokerage app and it was like day trading was like, ooh, dangerous. And then it was like options. And now we have like parlays involving like who's going to be the ring bearer at their wedding, probably Post Malone or somebody. I don't know. But like it's nuts. It's truly nuts. But are you guys going to place any bets on this wedding?
That's a good question. I'm not sure if I'll place any bets on the wedding, but I will say, if you guys want to pull up a interesting chart, pull up the IAI. It's the iShares U.S. Broker Dealers and Securities and Exchanges ETF. That ETF has just been on a tear over the last couple of years here. It has been absolutely crushing it. And so you think about some of the biggest holdings back through this idea of CME Group. We got Robinhood inside of there, Charles Schwab, S&P Global, Goldman Sachs, Morgan Stanley. So IAI, I think as more and more of these retail investors get excited about trading, if it's options, if it's event-based contracts, whatever else, excuse me, this ETF and all the people inside of it should likely benefit from that. So it's all about understanding what's going on behind the scenes and observing this and trying to make some money along the way.
Yeah.
Yeah, this is all the infrastructure for all the bets that we're making. So this is great. And
Interesting.
on that note, I saw a lot of traders on Stocktwits yesterday talking about the breakout in financials, XLF. A lot of the regular banks, JP Morgan, Goldman Sachs, Morgan Stanley, insurance companies, travelers made new all-time highs last week. So financials in general are in the kind of conversation right now. And I also think I think it was Tom Lee. He was on a podcast and it was either a podcast or CNBC yesterday where he was talking about financials being the next major winner over the next 12 to 24 months as part of the broader crypto infrastructure type boom. So financials are typically boring, but sometimes boring is best.
Now, here's
Yeah.
my question for you guys. When you think about adding an ETF, if it's a financials or an IAI or one of these new names to a portfolio, how do you guys like position yourselves? Are you someone who's, getting double digit weighting exposure, or are you maybe kind of creeping in a little bit slower?
I'll let Tom jump in on that one.
Yeah, I mean, I think it depends. Typically what I'll do is I'm a broad-based index investor, so I have 50% of my portfolio in VTI and then the remaining 50% in foreign ex-US stocks. So what I'll do if I want to make a bet on a particular sector is I'll just reduce the VTI holding and replace it with a bit more of XLF or IAI. So I'm essentially replicating the exposure, but then ramping up the sector exposure that I want, as opposed to just wholesale, like making 20% of my portfolio XLF or something. But how about
That makes a
yourself?
ton of sense. No, I'm right there with you, right? What I like to try and encourage people to do, and I like the way you sort of explained that, Tom, where you've got half of it in the VTI and the rest there is in foreign. What I like to encourage people to do is follow, and I think Tom, you even talked about this earlier when we were hanging out in Canada, but it's like this core satellite portfolio strategy, right? Well, so it's like the core of your portfolio, call it 60, 70, 80%. If you're very, conservative, could be invested into ETFs and index funds. And the other 20, 30, 40% is more opportunistic. If that is something you're seeing in an ETF, like an XLF, or maybe it's a single stock or something of that nature. So I like that breakdown that you just shared.
Yeah, and then 20% needs to be allocated to prediction markets. No, I'm kidding. Not advice.
I mean, I'm curious what that percentage breakdown would be, but it is certainly fascinating. I did a survey about 500 retail investors over the last few weeks, and it's definitely changed a lot since I used to do them when Austin and I met when I was over at Public. Just risk is the norm. So people are fine with it. Speculation's the norm. Interesting insight though, Austin, on IAI. I didn't realize that existed. Does that have any? Is that mainly the larger players there, or does it include things like a Webull, eToro? Is it like the whole system itself, or is it mostly focused on those names you listed?
That's a good question. We've got 38 total holdings. I'm just looking at this right now.
Yep.
The top 10, though, represent about 73% of the ETF. And that top 10 is Goldman Sachs, Morgan Stanley, S&P Global, Charles Schwab, Robinhood, Coinbase, Moody's, MSCI Incorporated, ICE, and CME Group. So I'm sure they've got a couple Weebulls and eTuros maybe inside of there. Who knows? But the top 10 represents about 73%. And it has been on an absolute tear. So if you're, and let's think about this for a second, just to kind of go a little bit deeper. And sorry, I've got all this congestion going on. But, we've got Jerome Powell now kind of pivoting toward a rate cutting cycle, right? A little bit looser monetary policy. I would imagine that that's only going to continue to make financials and things like IAI trend in the right direction, right? People are going to have a little bit more excitement around trading and maybe a little bit more liquidity. Borrowing fees are now lower when it comes to margin. So I would imagine like that's going to be a tailwind for some of these ETFs. What do you guys think?
I
Yeah,
mean,
they're certainly trading like it. So
yeah, and I think just like psychologically, we're heading into like football season, which is the time to be sports betting. And I feel like the thought process, the mind, like the state of mind you're in when you're doing that now feels similar to trading. And so doing more over here, is that going to spill over on the other side? I think it's going to be really interesting to watch. And also, a lot of people have multiple apps and things they're using. So I think the ETF is a smart play to get in on like sort of the picks and shovels of Howard would call the degenerate economy.
The degenerate economy.
It's
That is good.
That's what that's a Howard Lindzen TM. I don't know if he TM'd it. He should. Let's pop over to today's big earnings that's coming after the closing bell. Nvidia, AI chip powerhouse, they are expected to deliver blowout results. Analysts forecasting earnings at around $1.01 per share on 46 billion in revenue. Investors are really focused on a few things. One, updates on the China business. If you guys remember the past few months, there's been some ups and downs there. What can they sell? What can't they sell? Those are the H20 chip sales, and then their newest chips that they're rolling out and how those are doing. And of course, this is the big bellwether for AI in general. Tom, within the community, I mean, I remember last time we talked about them, their last earnings, like people in New York City were like watching and following the earnings call at like pubs. Is that excitement still there, or are people sort of accustomed to this one?
Yeah, I think that moment was, I want to say it was like last August already, so almost a year ago.
Yeah.
But I think a lot of the hype has kind of died down. We did a poll asking people basically how they think it will play out. 16,000 people voted. 52% expect the stock to beat earnings and the stock to jump. 35% expect the company to beat expectations, but the stock to drop. And then 9% and 4% expected to miss and either pop or drop. So the point is, like, people are generally expecting a beat. It's really going to come down to guidance and whether or not Jensen Huang can alleviate some of the fears from the last couple weeks. There was this whole AI like productivity scare. Hey, 95% of pilots that companies are running are not showing a material increase in revenue or productivity or whatever. And so that study from MIT really kind of threw the market for a loop last week. Then we had some cuts from Meta and a couple other places. So it was kind of the perfect storm last week. We had a hot inflation print. We had some of this negative Nancy news on AI out there. So the market is really looking for reassurance that this kind of hyper spending cycle in AI is intact. And I think the whole story of Nvidia is built on that narrative. So I'm sure they will do a very good job at kind of, directly addressing that and kind of keeping people on the optimistic side of things.
Yeah, you're right. There was kind of a deluge of like bad news. And I wonder, Austin, like, are people looking for an excuse for a pullback in AI? You had Sam Altman having a Fortune magazine article, I believe it was 2 weeks ago, basically saying it's a bubble. And then to Tom's point, there's this MIT study, which we could get into, but we talked about it yesterday on the show. You could really read that a couple of different ways. The other way to look at it is a lot of people are trying it, and it's just hard to measure some of the impacts. But do you think this is a moment where people might be just like looking for a reason to, or questioning, can this go as high as it's been going? What are your thoughts on today's earnings call?
Yeah. So when it comes to your remarks as it relates to the Sam Altman talking about a bubble, right? I think he said the word bubble in like a 15-second period. Like it was a lot of words of bubble there. That would definitely spook investors. But on the same token, he then went and said, oh, but we're still going to spend trillions of dollars in, data center infrastructure. So it's like, is he going to be spending trillions of dollars if he thinks all this is going to come crashing down? I vote probably not.
No.
Speaking more about this like bubble narrative, forward PE multiple at the .com bubble for the NASDAQ was over 100. Right now in the NASDAQ, it's at about 26. So we're nowhere near that craziness back then. We also had Nvidia last quarter. Their data center revenue jumped by over 400 and I think 30% year over year revenue growth for that data center business segment, right? This is real cash flow. This is real profits. And most importantly too, as you think about like, are we in an AI bubble? Well, back then in the .com, and again, I was only knee high to a grasshopper, right? So I'm 29 years old. I'm not pretending I was around here, but I've done a little bit of research. And back then we had a lot of these big names. They were, running this pets.com Super Bowl ads. They were making no money. They were issuing stock left and right, diluting shareholders. They were doing everything they can to kind of prop this company up and fund it. Where on the flip side, here today, we're seeing the opposite happen. We're seeing record high stock buybacks. We're seeing hundreds of billions of dollars on the balance sheet of these companies. We're seeing, like I said, earnings and cash flow growth from Nvidia and many other large names here. So I don't think that we are now. Will this all end in a massive AI bubble? Abso-freaking-lutely, right? Humans are emotional creatures. We're very much, the market's like a pendulum. It goes from one side to the other, one extreme to the other, and we spend a very little time in the middle there. And so I would argue that yes, this will end in some sort of bubble. Has the bubble popped? No, I don't think it has. I think investors, to Tom's point, are going into this looking for a little bit of reassurance, looking for, hey man, like what's the next part of this? And I think we saw Jensen Huang talk a little bit or post a little bit about some sort of like robotics chip or something of that nature recently. I could be mistaken. I think I might have saw that on my timeline. And so maybe the next part of this is, Nvidia's big push toward embodied AI. Maybe that's like their big next, like, massive business segment driver that's going to drive the top line and bottom line even higher. So I think investors are excited to see and get hope again. I'm not saying that they're not hopeful, but I do agree that there was a little bit of a shaky ground given the remarks from Sam and some of these others, and looking for some excitement here in the markets again.
Yeah, I mean, Jensen's got a tough task because it's when you're consistently delivering and you have that hype, the momentum, obviously the tattoo photo. It's like what you have to keep coming up with stuff. To your point, they need to share out the financials in a clear way, spell that all out, lay it out. But also, like I feel like investors are looking for pizzazz, and when the bar's up here, Abercrombie had earnings this morning, and one of their big call outs was they have an NFL apparel partnership. Like, all right, cool, you're Abercrombie. That's cool for you. You're Nvidia. It's like, what do you got to say? And so I think it's hard when you're at the top like that to stay there.
Now, here's the real question. When is Nvidia? Think about this, dude. If I'm Jensen Huang, I'm over here like, okay, Taylor Swift just got engaged. How do I figure out how to get Nvidia and Taylor Swift in the same like mind sphere of our investors, right? Because that'd be crazy.
I'm sure someone's done it. I feel like this has been memed like 4 ways to Sunday. Also, I loved your phrase "knee high to a grasshopper." Is that like a Southern thing?
Oh yeah, for sure. Yeah.
Oh,
yeah, it's my first time hearing it as well. I want to see Jensen go the opposite way though. He's already got the leather jacket. Let's put him on a motorcycle, get him on a ramp. He'll, jump through a hoop of fire or something, land on the other side, fireworks go, and then he announces the earnings that way. I think that's the only way he could really top 11 straight quarters of beating earnings. I mean, like, how much more could he do?
Yeah. Well, what's off the table, Treasury Secretary Scott Bessent reportedly said yesterday, according to the Stocktwits news article, that the government investing in them is not on the table. So they're making a lot of moves, but they're not going for that one. Intel's a little bit of a different situation in terms of the fundamentals of their business. So that's off the table, but, does anyone care? I don't think so. But it'll be interesting to watch that one later today. We also have, after the closing bell, Snowflake and CrowdStrike. So as you guys might know, Shai's off getting married this week, but this is a big week for his portfolio. So hopefully he's not on his Robinhood app too much when he's supposed to be doing wedding things. But CrowdStrike is, of course, the leader in cybersecurity. They are expected to report about 83 cents per share. 1.15 billion in revenue, estimated 19% year-over-year growth. So we'll see. Investors are a little wary of tech volatility, but looking for some confidence similar to AI in enterprise tech and cyber defense. So we'll see about that one. And Snowflake, of course, that's the cloud-focused AI data company. They are reporting as well. Investors are looking closely at their guidance, their AI product demand, which Shai talks about a lot. Cortex is that product, and whether the momentum will hold up. So it's interesting. This is a dead week for a lot of people, but there's a lot happening. Any thoughts on those other two guys?
I'm excited for CrowdStrike. We like think back to what happened. Was it last year? A year, like however long that power outage was, whenever that took place. I think it was like Q1 of last year, if I remember correctly. But all the blue screen of death, right? all that craziness happened with airports, and people were able to log off their work computers and hang out and whatever else, and it was because CrowdStrike messed up. And obviously the stock reacted violently to the downside. I think it plummeted 25, 30, 35% in a very short period of time as a response to that. But something else that really makes me excited about this company, you think about their competitor, which is Sentinel One, right? Ticker symbol S. Sentinel One has had their lunch eaten by CrowdStrike. Sentinel One stock has been doing absolutely nothing. Their earnings have been very, very abysmal. And I'm over here looking at that because I was very excited about Sentinel One, right? I thought, hey, this endpoint security stuff, like they're a little smaller player. Funny enough, Public actually used Sentinel One for their own laptops back in the day. So I was like, heck yeah, that's cool. But regardless, I was like, okay, endpoint security is definitely going to continue to be a thing as more and more people work from home, or whatever's going on here. So how are these two endpoint security leaders going to like battle it out? And turns out, CrowdStrike just ate their lunch, right? So CrowdStrike continues to just pull in massive enterprises, small business, like everyone all across the gambit. And I could not be more excited to own CrowdStrike for the next, let's call it 2, 3, 4, 5 years. It is one of those AI cybersecurity leaders that I would encourage everyone to have in their portfolio. Because Tom and I, we've talked about this in the past, Tom, in the sense of like secular growth trends, right? How important it is to own stock in these underlying trends that are going to be here for several years to come. And yes, AI in general is a secular growth trend, but I'd argue cybersecurity is one, right? Cybersecurity, you go look at Wall Street Journal, they publish an article every year as to what, these IT professionals plan to spend at their companies, and it's always higher by 10 or 12% every single year. Got to spend more and more money on cybersecurity, especially now with AI. And I would argue CrowdStrike is at the forefront of that. Palo Alto Networks is another name that's doing incredible in that space. But on the flip side, Fortinet, FTNT, they had a pretty bad earnings recently. So their stock dropped about 25, 30%. So I'm very much hoping that does not happen with CrowdStrike. If it does, I'll be buying the dip and dollar cost averaging. But at the end of the day, CrowdStrike is certainly one of my top favorites in my own portfolio.
Yeah, Tom, any thoughts on that one as you just observe as both an investor and also someone with purview into the community over on Stocktwits?
Yeah, I think like Austin said, this is kind of a crowd favorite. No pun intended. The stock's down 20% from its highs, which makes it an interesting setup into earnings. The 200-day moving average is just below current levels, and the 400-ish area is an area that technically it's played a transition role between buyers and sellers. So I actually think this will be an interesting setup. Whether or not this, if they beat earnings, this area will likely act as a trampoline and the stock will push higher. But if they miss, then we're back into kind of a range bound trade that we've been in the last 2 years, and it'll likely be stuck in the mud with some of its competitors for now. So, but overall, yeah, the community is bullish on this one. Generally, when we think about cybersecurity, it's this one in Palo Alto Networks that gets the majority of the attention. So agree with everything that Austin kind of threw out there.
Don't do my friend Cloudflare that dirty. Gotta keep Cloudflare in the conversation, man.
Oh, I forgot about those guys for a sec. But one thing on the cybersecurity, just the momentum. You think about all these things that used to be not analog, but analog, closer to being analog. Drones. You got nuclear. Like all these things are such high stakes build outs, and the demand for cyber even in those areas. And then I saw this morning Anthropic came out with some commentary around a topic I hadn't thought about, which is the other side of this vibe coding trend. Using AI to code can also be used for evil. So they're calling it vibe hacking. And there's some interesting things there. If you can just as easily build something using AI, how does AI help destroy things? And the other side, a lot of these kind of vibe coded platforms that come out don't have the level of security that something an enterprise would build, so they're more prone to attack. So, like a lot of the very same things that are democratizing our ability to build are also democratizing the ability for people to weaponize those. And I think that's gonna be really interesting to watch as we move forward there. So we look forward to getting those results. Earlier this morning, we heard, as I mentioned, from Abercrombie and Fitch. I think most people are probably interested to hear from American Eagle. That's next week. But Abercrombie stock that's been on a tear, but they had a bit of a mixed bag. The brand Abercrombie brand itself slipped sales down about 5%, but its teen focused Hollister line was up 19%, which is crazy. I thought Hollister was like left for dead. That's Kristen Cavallari 2003, let the rain fall down and whatever that song goes. They, as I mentioned, they're also the official NFL apparel sponsor. The AEO is the one that's been riding a bit of a wave on the Sydney Sweeney announcement, and then they just named Travis Kelce as an ambassador today. Speaking of America's royal family, so yeah, we'll see from AEO as that comes. Sticking with retail for a second, we'll also hear from Urban Outfitters after the closing bell. So we'll get a little taste of the consumers, where people are shopping, where things are going there. Uh, but let's quickly, before opening bell, Cracker Barrel, walking it back. So we've been talking about this ad nauseum on the show. So sorry, guys. It's just fascinating. Austin, any thoughts on this? Is crazy. They're gonna undo everything they just did.
Everything or just the logo?
I mean, it's everything. It's like the fonts were changed everywhere. The logo. I'm sure there was like signage for the stores. Like it's crazy what goes into changing a logo at scale like this with all the franchises. Or I don't know if they're franchises or restaurant owned, but yeah, they're just like, you know what, just kidding.
Well, as someone who grew up playing checkers on that front porch in the hills of Tennessee, that was my Super Bowl. I loved going to Cracker Barrels, and I still go to Cracker Barrel. Cracker Barrel is awesome. I think this just proves that that when the president tweets about you, that you kind of react, despite being a fan of him or not. I'm sure there are people on their board or people that is like, oh my gosh, we got to do what President Trump's saying we got to do, and so they end up doing it. But listen, I think this just is a testament to the power of social media, the power of people saying, hey, here's what I think, and if you don't do this, then I'm not going to eat there anymore, right? We saw this happen with Target, right? Target stock is down abysmally because of some DEI boycotting stuff, which, like, hey, more power to anyone that wants to boycott or not boycott or support. Like that's everyone's own prerogative, and I'm a big believer in doing whatever you want with your own money. But I think them rolling back on this logo was like a really interesting, like they caved, right? They bent the knee, and the bending of the knee to the general public is normally not something these companies do. So it was pretty interesting to see it actually happen. But it just makes me think, like, who's in that CEO's ear saying, yo, my portfolio's down so much because I need you to put that old white man back on that logo, girl.
I mean, Tom, like it's up 6% in the pre-market. I have like a kind of conspiratorial brain, and I'm like, I feel like we're gonna get into like WWF of corporate governance, where it's like, could you architect a situation where you create? No one was talking about this stock, and the company was like in the shitter, for lack of a better word. Like I don't think it was orchestrated, but like it feels like now this is like a meme stock. What's going on in the Stocktwits community around this one?
Yeah, I'll be honest. I don't think. Oh, there's the opening bell. We're down a bit today to start the day, but we'll check back in a few. I think the broader community is not super interested. I think it's more of a cultural movement than like a trader or investor movement. I mean, let's be real, guys. The stock was down 80% in the 4 years prior to this. Like, this is not about changing a logo. This is about something that's fundamentally wrong with their business.
Yeah.
And until they can get management and the board out there and say, hey, here's the solution to whatever the problem is at our business, like, this is just not that interesting of a story. I think what we're going to see is it's got the attention now, but as we've been talking about with Open Door and GameStop and all these other meme stock-esque, securities, these companies need to harvest that attention and push it in a productive direction. And I don't think a lot of management teams really know how to do that. And so I think for Cracker Barrel, this will kind of be a flash in the pan. They've got bigger problems to fix with their business, and a logo change is not going to do it.
So glad you made that point. Because you really do need to capitalize on the virality, and the news cycles are shorter and shorter and shorter. And it is, what do you do with that? You got all the eyeballs. It is, and to your point, also a lot of talk, maybe not so much action. There's definitely increased action in the stock, but what do you do in that moment? Open Door, we had hedge fund manager on earlier in the week. That open army is pushing. They were actually able to Eric Jackson help push out their former CEO. But what do you do once you have that attention is, I think, the next interesting thing to think about. Austin, I know you're a homeowner. Do you have any thoughts on like Open Doors business or where that one's at?
Well, I guess before the open door stuff, back to your
Yeah.
question of what do you do after you have all the attention? I think American Eagle is kind of doing that right now, right? They got all the
Yep.
attention from Sydney Sweeney. They became an absolute, just everyone talking about them if it comes to, whatever you're excited about that or not. But now they're announcing this stuff with Travis Kelce. I mean, they're
Yeah.
taking that momentum and they're just rolling with it. So, maybe they'll come out with, more people that they want to emulate and work with. Like that's how you do it, right? You capture
Yeah.
everyone's attention and controversy, and then you double back and you go, well, let's talk about what actually works and who people love. And that's the Taylor Swift, Travis Kelce duo. So maybe Cracker Barrel got the controversy. Now they come back and now maybe they're going to partner with a massive, someone that emulates their brand a little bit better. Maybe put them on the logo, right? Let's put Katy Perry on the Cracker Barrel logo. We all love Katy Perry.
I wouldn't say no. I was gonna say if I were on the marketing team, I would do something out of pocket like Pete Davidson.
Oh, interesting. Oh my gosh. Or what's his name? Matt Rife. I think that guy, he's pretty funny.
But Elf Cosmetics just put him in something. That's another example of Elf Beauty put him in something and people wigged out and then they dropped him.
Interesting. Yeah, see that, oh man, you're right, wrong doesn't matter. People always have an opinion about it. So what do I think about Open Door? I have not been following this one as closely as I'm sure you all have. To my understanding, Open Door makes money by purchasing homes from everyday people that want to sell their homes for, let's call it 400,000, and then selling them for 430,000, and then they make that $30,000 difference there. So let's call it 10% operating margins. I think, if I'm not mistaken, their actual EBITDA is like way lower than that. But what do I think about it? I think there's a lot of data behind the scenes as it relates to some of these transactions. I think there's a lot of data behind the scenes as it relates to these big milestones in people's lives. If it's buying a home for the first time, right? It's like, I remember when I bought a home for the first time, I looked around, I said, cool, I need home insurance now. I need to get some pest control. I need to figure out my lawn care situation. I need to figure, right? So it's like, there's a lot of other, big purchases that come along with buying a home. I think if they're able to use artificial intelligence in a meaningful way to value these homes better, to target the right audiences, to avoid the right areas of the country, they will likely be able to figure this out. I just haven't been following it, I'm sure, as closely as you all have. But I'm assuming you guys know the story here, what has caused the stock to go up so much recently? I know it was very much shorted, like massive short interest for a while there. So what's caused this pop recently?
So go ahead, Tom.
Yeah, I was just gonna say, I mean, it started kind of as a conversation on Reddit, as many of these situations do. Somebody outlined the fundamental case, said, "Hey, the stock's trading at 50 cents. It used to be at $40 or whatever. So maybe it shouldn't be at 50 cents. Maybe it shouldn't be at $40. Like there's an opportunity here." And so that kind of got the conversation started. The stock started to squeeze a bit, and then we saw Eric Jackson, who is a hedge fund manager that had um, you know, become a bit infamous for investments in Carvana and identifying that as a potential turnaround story and riding that all the way up. So he came into the picture, and he's been kind of the face of this movement in many ways. He's been on every media outlet, basically making the bull case for Open. He's doing things like he's standing outside Drake's house. I think today is day 7 or 8. Where he's like
I've
trying to
seen
get Drake
that. Yeah.
Yeah, so right now he's just, fanning the flames and trying to get management to act. And like Katie said, I think it was last week or the week following, the week before, after many attempts of trying to get the CEO to engage with him on a podcast or just publicly for retail, she finally stepped down. And so now there's a management shakeup. They're trying to get the board to take more action. So again, I think the core story here is there's either a cultural reason or a market reason why people get interested in this, and then really the investment opportunity is what keeps people there, right? Again, Cracker Barrel, Open Door, American Eagle, like these are stocks that have been massively beaten down and people see potential opportunity. They're saying, hey, these are brand names that we don't think are going to zero, but they're priced to go to zero. And so maybe they're not worth zero, but maybe they're not worth, 500 billion or whatever, but there's a lot of room in between there. And that's what people are trying to initiate new price discovery. And ultimately, as that price discovery happens, it becomes a catalyst for these companies to actually mount a fundamental turnaround by raising money, by capturing that attention and funneling it into kind of productive ways. So that would be the 1 minute spiel I'd give on just kind of the Open Door and broader meme stock situation. But yeah, I think $5 is an important level. This is kind of where institutions can or cannot play in the stock. So a lot of people are watching that level as a place to identify whether or not momentum will continue or if this is going to fizzle out. If management doesn't get in there and engage us.
I will say
Us
from the
retail.
perspective of a homeowner, and I know people in my own neighborhood, right? So, I live in the outskirts of Nashville, Tennessee, in a small town called Nolensville. And so there's people in my neighborhood that are like, hey, I need to move. I need to figure this out. But I think we've seen that graph where the distance between buyers and sellers has like never been bigger, right? And so I know there's been homes in my neighborhood that have been for sale for like 1, 2, 3 months. And they're like, listen, I think I'm just going to put it on Open Door, take my couple $100,000 and hit the road and go do what I want to do. So there's certainly a demand for it. And the question is, in my opinion, what that demand begins to shape up as, or yeah, how that begins to shape up as we think about lower mortgage rates. I would hope that we'll see the fives again. Maybe we'll see mortgage rates in the fours in the future. But it's, as someone who's like looking around and trying to figure out what my next move is from a home perspective, it's pretty discouraging to have to think about what these interest rates look like at the moment compared to what they were during the pandemic when I bought this house and another one in the neighborhood. And so it's a lot. And I hope though that Open Door can maybe fill in that gap.
Yeah. What's interesting that you talked about it, Austin, is you're referencing the iBuyer segment, which is where they purchase homes. So they kind of own the seller side of things. They purchase them, they fix them up, they resell them. Eric and a lot of other investors right now actually think they should cut that business. So Zillow tried to do it, Redfin did, and they both abandoned it because it's so cost intensive. So without that is sort of their wedge. What are they going to do then? They have to build out the technology, and he's talking about using things like AI and getting people the best prices. So it's going to be really interesting to see if they will turn that around if they do get rid of that certain segment, and what happens when those interest rates come down, possibly in a couple weeks here.
Wait, so
Yeah.
again, I don't know anything about Open Door, so this is me learning in real time. So how I thought Open Door made money was the iBuyer. So you're saying they want people to get rid of that, or they want management to get rid of that entirely? What would their product or service? How would they make money then?
It's essentially a platform that's pairing the buyers and this, like the other ones. They believe they have better technology and data to link those together. I don't think they're going to get rid of it completely. It is sort of their wedge product, but they're sitting on a lot. They put a lot of capital in these houses. And then to your point, they're just sitting there. So it will, we'll see when the interest rates go down, if there's a little more liquidity there. But Eric was, and you guys can check that out on our YouTube page and see the full interview. But yeah, he thinks they should not focus on that at all and build out over here, which is better for their balance sheet, but also that kind of takes away their moat, so to say.
Interesting.
Yeah. I mean, flipping cars and flipping houses are two very different things. Like
Yeah.
houses take a lot longer, a lot more capital intensive. So I see the similarities between Carvana and Open Door, but I mean they're worlds apart. And I actually, as part of the Travis Kelsey situation and Taylor Swift engagement, I brought some housing charts because there was some discussion around whether or not this will create like an engagement and household formation boom in the country. I don't know if I would go that far, but I think the biggest piece is kind of housing affordability, which is at record lows right now. So, Keith, if you could share chart number 3, basically what this chart is sharing is that it takes nearly 50% of median income to buy a median house in the US. And like that is just not sustainable. People cannot afford to be buying homes right now. And so interest rates are certainly a part of that, but we're sitting at record levels for prices as well. And so, even if interest rates come down, this ratio might move from 50% down to, 40%, but that's still a big gap for people to buy a home. And so I think this is kind of the broader conversation that needs to happen around housing. Like there's just not enough supply, and we've got these massive imbalances where millennials, Gen Z, like we're all turning the same age where we're trying to get married, trying to buy a house, trying to buy stocks. Like we're all at these critical life junctures at the same time, and like unless you increase the supply of these goods and services, like prices are going to stay high. And so, the market is in an interesting spot. If you look at Home Depot, any of the home builders, Lowe's, these stocks have been running for the last 3 months, pricing in lower rate expectations, come the end of the year and into early next. But to me, I think trading the stocks and then looking at the actual housing market is very different, because until this chart is fixed somehow by incomes catching up or prices coming down, like the housing market in general is going to be pretty frozen, in my view.
Definitely an interesting one to watch. Tom, while you have your fancy charts up, let's talk small caps. So I know you're watching those, trying to break out again. What are you seeing over in small cap land?
Yeah, I think this is just again the story of rotation. People are looking for what's going to drive the next leg of this bull market. Nvidia is up 110% since its April lows. It's up 15x from 2022, and so uh, a lot of the hot retail names have already run quite a bit, and the market is relying heavily on tech doing well. And so people are looking for rotation. If we do get lower rates, smaller cap companies should benefit. They're more relying on debt for growth. They're more U.S. focused in terms of their operations, and so there are a bunch of tailwinds potentially here for them. But if you look at the Russell 2000 chart, we're basically back at the same level we were at in 2021. So people are looking for a breakout here to confirm that we're kind of getting that rotation. A more interesting chart, I think, is number 6, Keith. This is the S&P market cap weighted versus the equal weighted index. So last Friday, I think it was, we got kind of a breakout to new all-time highs in the equal weighted index for the first time this year. Basically, again, signaling that we're seeing areas outside of technology start to work. Some of the financials that we talked about, consumer discretionary is breaking out. So people are really looking for continued strength through the end of the year, but not coming from the same places. They're looking for kind of this rotation under the surface into some more areas that haven't quite run as much. And the last piece is chart number 8. People are looking to China. If you look at the vast majority of foreign ETFs, a lot of them are at all-time highs already. China is stuck in the mud for obvious reasons. Obviously, there's a lot of geopolitical headwinds and issues there, but more generally, if people are looking on the bright side and saying a deal will get done eventually, and a lot of these a lot of the Chinese market has not been kind of priced to reflect that. And so this ETF KWEB is kind of based on the Chinese internet stocks. There's MCHI, there's FXI. These are all kind of at 2.5-year highs and trying to break out. So people are looking for value. They're not chasing the Nvidias, the Robinhoods, the Palantirs, and they're looking elsewhere and saying, hey, there might be an opportunity in China, in financials, in small caps.
Austin, do you have any exposure to China or small caps? Any thoughts on those two topics as Tom brought up?
Yeah, I think small caps make a lot of sense right now, especially as the Fed begins to kind of pivot away from interest rate hikes and now thinking about cuts as we optimize for unemployment. I think, let's think back to, you guys can kind of see on your chart in 20, I wish I could like draw on it somehow, but 2018 to 2020, even, mid 2020, 2021, even, you see that kind of like it was trading sideways for a while. Then we broke out of that, right? Which would happen in 2021. I think we ran about 42% from sort of that breakout to that next all-time high. I would imagine that, for the last 3 years now, we've been sort of doing the same thing. We've been sort of this long basing pattern. And we're now trying to figure out, okay, what happens? How much higher do we go if we end up breaking out? I would imagine we very well break out. Maybe we could see a 300 Russell 2000. I think that's very much in the cards over the next 9, 12, 18 months, depending on, because all of this with the small caps, like, yes, there's two components to it, right? So on one side of the equation, you have to think about interest rates because lower interest rates are good for the small cap names in the Russell 2000. But the other thing you have to really consider is recession odds because these are the companies that are going to get hit most aggressively if we do experience some sort of economic recession. Now, Goldman Sachs came out, I want to say it was a week or so ago, saying there's only 30% odds of a recession for the next 12 months that they're looking at. And then Kalshi and the Polymarket recession odds for 2025 are below 10%. So that, in my opinion, we're Goldilocks when it comes to Russell 2000 upside opportunity, assuming we're able to see some of those rate cuts in September, assuming we're able to sidestep some sort of recession for the next 9, 12, 18 months. I think the Russell 2000 certainly has some room to run.
Very interesting. We had Ryan Dietrich on yesterday talking about the trends he was seeing in the research, and he agreed with what the prediction markets are saying, at least on the continued bull market. So we shall see there. Let's move over to some other headlines we're tracking over here today. I'm just going through my list, seeing what's new. Actually, Apple announcing an iPhone 17 launch event September 7th, so we'll look out for that one. I don't know about you guys. We talk about Apple a lot on this show, about their AI ambitions, where that's going. Obviously, they're still doubling down on the hardware. We also have some headlines coming out that the India tariff that was threatened of 50%, that is looking like it's going through as well, and that will impact their operations. Apple's a tough one. So they're similar to Nvidia, where they have these big events and people expect the world, and then it's a small update. Any thoughts on Apple? I mean, Tom, it's been a bit since we talked about this with you, or even you, Austin. I know I think last time you were on, we were talking about these guys. This has been sort of a neglected stock. It hasn't been talked about so much over the summer, and it used to be one that was on the tops of everyone's tongues. Any thoughts on these guys?
Well, I'd argue that the reason why they sort of fell to the wayside is for the last 10 plus years, Apple was a growth story and now they're a cash cow story, right? I mean, that's what we're essentially seeing. Um, I'm in real time here now trying to pull up some data on the company. But as we think about Apple and what they've been able to accomplish over the last handful of years, yeah, their earnings per share continues to trend higher, but the only reason why is because of these stock buybacks, and they're able to print cash like no one else, which is great. But they're not able to innovate and drive new revenue growth like we're seeing from some of these other Mag 7 names. If it is, the 30+% growth we're seeing in Microsoft Azure's business segment, I think it was 19% in AWS, or Google search is up, and like all these things, like AI is driving growth with a lot of the Mag 7, but it's not driving growth with Apple. And that's my opinion as to why they're not seeing a lot of the sexy headlines. Maybe they're able to jump in the game here with the Perplexity acquisition. I think there's been rumblings of that. Who knows? But Tom, what's your perspective on Apple?
Yeah, I tend to agree. I mean, again, it's a growth story turned a value play, and I actually think expectations have gotten pretty, pessimistic around Apple. Whether it be on Wall Street, Main Street, like people are just kind of over it. So, maybe we get an upside surprise at this event. Maybe their iPhone that they come out with has a new feature or something related to AI that's like not as bad as expected, and the stock could pop there. So I don't know. I think I'm not a tech fanboy, so I can't speak to the tech side of the iPhone, but just from a sentiment perspective, this has definitely been stuck in the mud for a while because people again see the opportunity. They say this company has so much cash. They have all the potential. They just don't have maybe the talent or the vision from Tim Cook to be able to direct the company in the right way. So, yeah, this is kind of a sleeping giant. I think it has a bit of a price floor under it because of how much cash it generates. And again, it's still the third or fourth largest company in the world. We kind of forget that sometimes. So, I mean, yes, they haven't really done much over the last year from a stock perspective, but I mean, this is still one of the goats of all time.
Tom, I love how you describe yourself as not a tech fanboy when last time you were hyping up corn futures. How are those been working out?
Yeah, that trade's not doing so well.
Oh.
That and palladium, I'm long both of those, and nat gas, which is bouncing back a little today. So
All right. Well, hopefully that turns around for you. Quick plug, guys. All week we've been talking about Stocktoberfest. Again, this is going to be insane. It's in Coronado, California, October 20 to 22nd. A gathering of like-minded individuals in our space, traders, investors. There'll be public companies there. You can go to stocktoberfest.stocktwits.com and hear about it. But Tom, you're OG in the Stocktwits community. Can you tell us a little bit about your experiences at this event?
yeah, this is an event very near and dear to my heart. This kind of kickstarted my career in many ways. I'm sure I would have found my way here at some point, but yeah, I was a freshman in college. I kind of caught the market bug. I was studying accounting, wanted to learn about the market. So I started blogging. I was on Stocktwits. I was on Twitter. I was basically anywhere I could talk about my, small options portfolio. And so I was consistent. I was building followers. I got to like 20K followers on Stocktwits. And then in 2015, I was a junior, and Howard Lindzen put out a tweet and was basically like, "Hey, we're doing Stocktoberfest. In 140 characters or less, explain why you should be there." And I was like, I don't know. I'm a junior in college. I love the markets. I've been on your platform every day, every hour basically for the last 2 years. And I would love to attend and basically network and see where I could take this. And so long story long, he selected me. And 2 weeks later, I was booking a flight to Coronado, California. It was my first time ever on an airplane.
Wow.
Oh man, I totally set you up with the link there. But anyway, I I was on a plane, got to Coronado, and I was basically able to interact with all of the community members that I had been learning from. Ryan Dietrich was there, Josh Brown was there, like all of the FinTwit OGs were there. And it was instrumental in me making connections and kind of getting my name out there. And 10 years later, I'm here attending Stocktoberfest again, but this time working for Stocktwits. And that's why I'm in this position. That's why I work for Stocktwits. Community and markets is what I'm all about. It's been in my DNA since college. And so, yeah, would love for somebody else to have that experience as well. Stocktoberfest is where it happens. You got to be in the room and got to be putting yourself out there. And this is a great place to do it. So would love to see everyone there. Maybe I'll ping Howard too. We should do another giveaway for the 10-year anniversary.
I was gonna say, I think last night he tweeted something
Okay, awesome.
similar, Tom. So if you guys
Yeah, we'll
wanna
have to put the
go,
link in the description somewhere.
Yeah.
Definitely enter. The worst thing that can happen is you're not selected, but the best thing that could happen is it changes your life like it did mine. So Stocktoberfest is great, and hope to see everyone there.
Well, it'll certainly be a good time. It's stocktoberfest.stocktwits.com. Austin, we're getting to the end of our time. I'm sad, but do you have any parting thoughts? Because I know we don't get you all the time, but like in Austin's world, you got this podcast that's ripping. You're in a billion different things at once. What are some of the things going into the fall that you're excited about in terms of what you're building or topics in the market?
Yeah, I'll do both. As to what we're building, we just launched our Friday episodes of the Rich Habits podcast. And so those are the biggest headlines and happenings that are impacting you and your money. very much what we're talking about here on this show. We're talking about on the Rich Habits podcast every Friday. My co-host Robert Crook and I are publishing that Friday mornings. As it relates to the markets, what I'm excited about for the end of this year, such a good question. I really have begun to enjoy seeing more and more, a lot of what we talked about today of the Travis Kelce's, the Sydney Sweeney's, the Cracker Barrels, the Open Doors, right? All of these like not so much meme stocks, but kind of turning into meme stocks. I love seeing that because it just means more and more people are getting interested in investing. More and more people now get to think, oh my gosh, I can't believe Cracker Barrel stock went down. And there's one person that heard that said, wait, what's a stock? Right. And so now they get to learn more about, like, I love that. It gets me so excited. So in general, the markets, I can't wait to see more of these. Maybe there's something tied to Taylor Swift and Jensen Huang when it comes to earnings today. Who knows? Maybe that was the engagement. The reason they got engaged is to get ahead of the Nvidia stuff. But regardless, no, it's really exciting, and I'm super grateful to be here with both of you. And you guys run an incredible show, and I can't wait to come back.
We love having you. I totally agree with you, Austin. I think it's exciting how many more people, especially Taylor's fans, women, getting involved. We love to see it. Tom, it's always amazing to see you. Any parting words of wisdom as we go into a long weekend? I'll be back, but you guys won't. What's your head at today?
Yeah, I would just say it's a great time to be a retail investor, trader. Things have never been better from a tech and access standpoint, and I just really enjoy being able to kind of share the thoughts of what I'm seeing in the community. And right now people are generally still bullish, but like I said, they're looking for opportunities outside of the the standard names. So keep an eye on Apple, keep an eye on Nvidia, and we'll see if we all survive Nvidia Day and be back next week.
Yes. Follow along on Stocktwits, post, vote in the polls. We will be back with you tomorrow at 9 a.m. Eastern to cover everything that went down. Guys, thanks again, and we'll see everyone back here tomorrow, 9 a.m. Eastern.
And I will leave everyone with a parting quote, if that's okay. Here we go. Ready? Bears sound smart, bulls make money. Let's all go make money together. Let's do it. Here we go.
Awesome.
Nice. All right. Bye, guys.